Good morning. This is Larry McMillan with a stock market update on Monday, September 20th, before the market opens. So overnight, last night, Sunday night, the market is down a lot. Not exactly sure why. They're saying perhaps the worries over the Fed meeting, which is probably a lot more than that. But in any case, S&P is now beginning to break support. On Friday, it closed just below support at 44.35. And now today it's challenging the important support at 43.70. If we close below 43.70, I think we're going to be in for a bearish market for a while. Markets move fast these days, so it might only last a couple of weeks or something. But it is October, and so the bad news is that in the beginning of October, the market often goes down. The good news is that October is known as the killer of bear markets because usually a bottom is formed later in the month. But for right now, it does look like we're going to have some trouble on our hands. So the chart of S&P is very much dependent on holding support at 43.70 today, and that's on a closing basis. If it can't do that, then bearish positions would be necessary. The equity-only put-call ratios continue to be kind of mixed. We have still a buy signal from the standard ratio, while the weighted ratio is on a sell. Breadth has been terrible. Got oversold, tried to give a buy signal, went back to a sell signal, and now both our breadth oscillators are on sell signals. And they're, of course, going to be diving deeper into oversold territory today. We'll see what develops from there later on. But oversold does not mean buy. So if these things are heading into oversold territory, you want to be careful. New highs versus new lows, barely clinging to a positive sign there. Just a few more new highs than new lows on the New York Stock Exchange on Friday. And in terms of stocks only and NASDAQ data, it's roughly the same. So barely hanging on to a buy signal. In terms of realized volatility, we're on the verge of a sell signal there too, and we'll probably get that today as well. For that, we look at the historical volatility, the 20-day historical volatility of the S&P 500. If that moves above 10%, then that's a sell signal. It closed Friday at 9%. So if we have a big down day today, that will certainly push that into negative territory. The area that's been reluctant to join in anything bearish has been Implied Volatility Vix. So we didn't get a sell signal from Vix on Friday, but overnight, VIX is up huge. It's up like 5 points from 21 to 26 roughly. And so that would terminate the spike peak buy signal that's in effect and would bring about the worry that we might go into an uptrending VIX, which can be nasty for stocks. So we'll play that day by day. But another thing to watch there is the relationship between the October VIX futures and the November VIX futures. October is the front month, and if it begins to trade at a higher price than November, that also would be very negative. It hasn't happened yet. Right now it's about 40 cents the bullish way. But if it inverts, and especially if it closes inverted, that would be another negative factor. So things have deteriorated. We had been holding a core bullish position. That will no longer be the case if we close below 43.70. And it looks like other sell signals may join in soon after that. I would expect that, we will go down, get fairly deeply oversold, and then get some strong buy signals probably later in the month. But I invite you to visit our website, take a look at our daily newsletters, where we'll keep you up to date on these things, of course, daily. And good luck and good trading.